Hello, my name is Antonio. I'm with RCAD Business Solutions and I'm independent advisor, senior advisor for Stride Solutions. These are very challenging times for our nation, unprecedented. Particularly if you're a small business owner, you're really feeling the financial bite of all of this. If you're in the real estate industry, hotel industry, if you're a farmer or the manufacturing industry, I know that you are really truly feeling the economic financial bite of this crisis. But I'm here to talk about a little known valuable tax strategy called cost segregation. But before I go any further, I want to give you a little bit of backdrop on what is Stride and how do we benefit our clients. We primarily look at federal specialized tax incentives, as well as 4 areas of audit: credit card merchant audit, waste and recycling audit, workman's comp audit, as well as parcel shipping expense audits. But we've recently added a 6th tool. We have a corporate funding program and lending program where all clients are able to access valuable capital to keep their doors open, to build, to open the doors, and as well as to expand their business. You can imagine how this is a very valuable tool in today's climate. With our specialized tax incentives, we have saved our clients over $300 million with our proprietary app. We are able to search federal, state, and local taxes that particularly for our clients' industry. And we do that via what I call a consignment basis saying that our clients don't pay anything out of pocket until they see the benefit of what we're able to save them and that they want to move forward. So you can say that it's a no-lose proposition for our clients. They don't come out of pocket for anything until they decide that they get it, they want it, and want to move forward. And even then, our fees come out of their savings. Okay? But what is cost segregation? Cost segregation is, as what was stated in accountingtoday.com, is a study that should be in the back pockets of every commercial real estate investor. When optimized, they can increase cash flows, reduce tax liability, and uncover deductions that were missed. And thanks to the Tax Cut and Jobs Act of 2017, these benefits are more favorable than ever before. Cost segregation is a powerful IRS accepted tax planning strategy used to accelerate depreciation costs or deductions, producing significant cash tax deductions and increasing cash flow. Cost segregation studies are a lucrative tax strategy that should be considered in almost every real estate purchase, says the U.S. Treasury. Now, even though they specifically talk about real estate, but this strategy can be used in regards to commercial property as well. If you have a commercial property, building a commercial property, leasing commercial property, this can be a very important tool to use. Cost segregation has been around since 1997. The study allows for the developers and property owners to accelerate their tax deductions through depreciation of both developments and acquisitions. The cost segregation study allows for the owner and lessee of real property to separate the purchase price, the cost to construct the building, or improvements made to a building along with other assets designated as personal property. These assets can then have their depreciation schedule shortened, thereby reducing the owner or lessee's tax obligations. That's huge. That's huge. And to better illustrate this, we look at a $3 million building. We could say that it is a hotel where we basically segregate each component of that building. Everything from HVAC system, lighting, fixtures, carpet, paneling, everything, anything, every component in that building is segregated and monetized. What typically happens is that the building and all components are looked at under the same 39-year lens. But do you keep the carpet for 39 years? Do you keep the lighting fixture for 39 years? How about the HVAC system? Do you keep that for 39 years? Do you not maybe expand, remodel in 39 years? Do you keep it for the whole 39 years? Okay. What cost segregation does is allows us to, again, segregate each and every component of your building and monetize it, give it a value. And where we reclassify those components from real property to personal property, now we're able to look at them individually using what's called a CSI codes to determine the components value and depreciable period from 39 years could be down to 5 to 15 years. Okay. And again, that shortens your depreciable period that you're paying on that building and its components, therefore creating a significant cash flow for you. Here's an example. Say you bought a building for 3.5 mil 5 years ago. We sit down with you and your tax professional, and we're able to identify 20% of those components can be allocated not for 39 years, but for 5. On top of that, since the IRS allows for what's called a catch-up, we're able to go back those missed years and catch you up. $700,000. $700,000. You think you could use $700,000 right now? How about $200,000? How about $65,000? This is what we're talking about. Many of y'all could be sitting on huge sums of cash right now, unaware, and unaware to your CPA, because most CPAs aren't trained in tax credits or tax incentives. No disrespect for them. In a lot of cases, to me, I equate them to a pharmaceutical doctor. Most pharmaceutical doctors do not know about homeopathic remedies or other aspects to the medical industry. The same thing in regards to CPAs knowing about tax credits or tax incentives. That's why we will be a very good partner for them to help them get you the most money. Okay? But it gets even better. Not only does the IRS allow for Ketchup? They have increased the bonus depreciation from 50% to 100%, and it's available to you immediately the first year, immediately today. Also, say if you just recently bought a property, but the previous owner never done a cost segregation study. Now you could go and access that period of time that the other owner had that property. Think about that. So you increase the benefit of doing a cost segregation study, because now we not only look at the time that you had the property, but we look at the period of time that the previous owner had it, and you benefit from it. So if you haven't had one of these done and you want to talk further, I'd love to talk with you and or your tax professional. Give me a call, email me, go to my website. Let's schedule a time, no matter where you are. If you're in the Atlanta area, give me a call. I'd love to meet with you. And or if you prefer to do it online, definitely do that too. But I'm here to serve you. I'm here to help. Give me a call. Email me. Again, my name's Antonio, and I'm AutoCAD Business Solutions, independent senior advisor for Stride. I look forward to hearing from you.